Bitcoin opponents in El Salvador, opposition grows despite cryptocurrency deployment. Even as El Salvador's plan to make Bitcoin legal tender takes effect, opposition to the bill lingers. 2021 will almost certainly go down in history as one of the most exciting years for Bitcoin, BTC, considering its recent embrace by billionaires and mainstream institutions, not to mention El Salvador's move to make it official tender. In the case of El Salvador, it almost appears as though the entire world is watching to see whether the experiment will be a success or a complete failure for the Central American nation. With the official adoption of Bitcoin as legal cash in El Salvador on September 7, a surge of protests against the decision has raised concerns and ambiguity about how the new law will be implemented. From the arrest of individuals protesting the Salvadoran government's new rule to the wave of residents denouncing Bitcoin's legal status across the country, the pioneering cryptocurrency is encountering some headwinds. How Bitcoin got to be considered legal tender. It all began in early June, when Salvadoran President Nayib Bukele tweeted that the country's legislative assembly had passed a bill legalizing Bitcoin. The law was scheduled to take effect on September 7 and would allow the country's 4.5 million inhabitants to make Bitcoin transactions in stores statewide. Bukele stated in his announcement that once a formal bill establishing Bitcoin as legal cash is passed, Chivo ATMs, Chivo is the name of El Salvador's official Bitcoin wallet, will eventually be everywhere in the country. This would enable El Salvadorans to cash out their Bitcoin holdings without incurring commissions, as is the case with services such as Western Union. Additionally, Bukele promised citizens that they will not be compelled to use Bitcoin. The 40-year-old president stated in a statement that someone may always queue at Western Union and pay a commission. What if someone is averse to using Bitcoin? Well, then, refrain from downloading the app and carry on with your normal life. Nobody is going to take your money, he stated emphatically. The initial wave of opposition. Following the news, a group of activists calling themselves the Popular Resistance and Rebellion Bloc, BRRP, formed in order to voice their opposition to the Bitcoin regulation. President Nayib Bukele passed the law making cryptocurrencies legal tender in the country without conducting necessary public consultations, one activist stated. While the protest group cited difficulties such as Bitcoin's volatility as reasons for caution, its primary argument is that the law benefits wealthy firms involved in accused money laundering at the expense of corrupt officials. Bitcoin is mostly used by large businesses, particularly those with ties to the government, to launder illicit funds, one protester stated. According to a letter from the BRRP organization, entrepreneurs who invest in Bitcoin will avoid paying taxes on their gains, and the government will spend millions of dollars on taxes to execute the entire campaign. Indeed, the law to legalize Bitcoin includes some intriguing provisions, like a zero capital gains tax on BTC. Additionally, the measure granted investors permanent residency by making a 3 BTC investment in El Salvador. Mario Gomez's arrest. As the contentious Bitcoin bill became law on September 7, both supporters and detractors have emerged, with the newest development being Mario Gomez's detention. According to many local news agencies in El Salvador, Mario Gomez, a computer and cryptography expert who is also an outspoken critic of the government, was arrested and kept for several hours before being released by local police. Gomez has been known to often express his opposition to the government's move to legalize Bitcoin on social media. Observers such as Steve Hanker, a Johns Hopkins University economist, characterized Gomez's arrest as an example of an authoritarian police strategy in operation. According to Hector Silva, a counselor in the mayor's office in San Salvador, The arrest of Mario demonstrates the government's vulnerability in terms of enforcing the Bitcoin law, but confirms something far more hazardous. They are willing to use every institution required to silence critical voices, Silva continued. Although the police stated that Gomes was held as part of an investigation into financial fraud, news sources indicated that he was seized without a warrant and that an attempt was made to seize his phone and computer. Protests of citizens. Prior to Gomez's arrest, seniors in El Salvador flocked to the streets to protest the government's plan to pay retirees' pensions using the volatile cryptocurrency. While speaking with reporters, one demonstrator from the audience, which included veterans, disabled pensioners, workers, and retirees, stated, "We are aware that this coin changes significantly. Its worth fluctuates from second to second, and we shall have no say over it." While Bukele has stated that the usage of Bitcoin is optional in the country and that salaries and pensions will continue to be paid in US dollars, the protesters highlighted a general lack of information about the technology. Additionally, many have claimed that officials have provided little information about the benefits and drawbacks of Bitcoin. "We have no idea what currency is being used. We have no idea where it originates from. We have no idea whether it will generate profit or loss. We have no idea," one Salvadoran stated. Bukele's management responded by stating that the usage of Bitcoin is not required and that necessary training and alternative payment methods will be supplied. Contradictory views. While President Bukele has an extremely high approval rating, recent surveys on the Bitcoin bill indicate significant opposition to the measure. According to a recent study performed by El Salvador's Universidad Centroamericana José Simeón Caz, up to two-thirds of respondents favor repealing the law, and over 70% prefer the US dollar over Bitcoin. International institutions such as the International Monetary Fund have also expressed concern about the macroeconomic, financial, and legal implications of El Salvador's Bitcoin adoption. Siobhan Morden, head of Amos Pierpont's Latin America fixed income strategy, stated that the ambitions for Bitcoin under a more authoritarian leadership will almost certainly exacerbate worries about corruption. Others, on the other hand, are hopeful that the new rule will eventually benefit Salvadorans, given the country's economy's reliance on remittances sent home by migrants. Remittances to the country totaled $6 billion last year, accounting for a fifth of gross domestic product. El Salvador's legalization of Bitcoin as legal cash provides the government with some flexibility and autonomy in financial matters, said Alexander Blum, managing director of 2 Prime. Alberto Echegaray Guevara, an artist and entrepreneur, echoed his sentiments, stating, "President Bukele's Bitcoin law is not only aimed at making international money transfers cheaper and easier for 70% of his unbanked population, but also at establishing a new economic hub and remittances platform in Central America." According to Adrian Pollard of Holler X, it is common for new technology rollouts to have glitches and opposition, but that is precisely why it was made voluntary. "I'm sure there will be further hiccups along the way for El Salvador, but they will be worth it in the long run. Indeed, I suspect that other South American countries are not far behind and will follow suit," Pollard concluded. The SEC issues a warning regarding crypto investment scams, citing some investors' FOMO. The United States Securities and Exchange Commission, SEC, has issued a warning concerning fraudulent cryptocurrency investment schemes. The regulator adds that some investors may be experiencing fear of missing out, FOMO, as a result of the recent price increase of some crypto assets. The SEC warns investors against cryptocurrency scams. The Securities and Exchange Commission's Office of Investor Education and Advocacy, OIEA, and the Division of Enforcement's Retail Strategy Task Force, RSTF, published an investor alert last week on cryptocurrency investment schemes. The notification states that fraudsters continued to take advantage of the growing popularity of digital assets to attract retail investors into schemes, frequently resulting in catastrophic losses. Given the growth in price of certain digital assets in recent years, some investors may have FOMO, fear of missing out, fearful that they may lose an opportunity to become extremely wealthy. The alert details several red flags of a scam. Guaranteed high investment returns. With little or no risk is a well-known red flag of deception. The SEC said that fraudsters may even present fabricated history returns on their websites to demonstrate great investment returns. Another red flag is the seller's lack of a license or registration. According to the SEC, unlicensed, unregistered sellers commit the majority of securities fraud directed at retail investors in the United States. Additionally, scammers frequently invent investment returns in order to seduce investors. Additionally, the SEC cautioned that if an investment opportunity seems too good to be true, it almost always is. Finally, the notification warns against the use of false testimonials. The SEC highlighted that investors should never make investing decisions exclusively on the basis of testimonials, stating, "Fraudsters occasionally pay individuals, such as actors posing as ordinary people who become billionaires, social media influencers, and celebrities, to promote an investment on social media or in a video." What Cardano requires to maintain its upward trajectory. The year's most anticipated event is set to occur, as the Cardano Alonso hard fork is nearing activation. The addition of smart contracts to the Cardano network is the first step towards a market revolution. If it performs as expected, it will send shockwaves through the cryptocurrency market due to its capabilities. However, the concern here is how severely it could harm Ethereum's competitors and how investors would react. Cardano, Ethereum, and the future of smart contracts. Cardano. With the Alonso hard fork scheduled for September 7th, investors and developers alike are understandably thrilled. However, throughout the smart contract testnet's operation, customers saw several significant concurrency issues, which sowed doubt in their hearts. Nonetheless, when comparing Cardano with Ethereum, it becomes evident why the former has a high chance of surpassing the latter. Additionally, ADA's network is capable of processing more transactions per second, 250 TPS at the moment, than Ethereum's, 15 TPS. Additionally, it offers lower gas prices. This will aid Cardano's growth at a time when Ethereum's costs average around $4.20 per transaction. Additionally, smart contracts are emerging at an ideal time, as NFTs have already dominated the industry. Daily volumes have been around $64 million. This could result in the migration of Ethereum-based NFTs to Cardano's faster and more affordable network. What are the investors' perspectives? Investors were scared by the September 7th drop, as liquidations reached a 4-month high and open interest plunged to a monthly low. However, they appear to have reverted to optimistic sentiment in expectation of Alonso. Purchasing orders exceeded forecasts by 12 million ADA, $29 million, while sale orders exceeded predictions by 12 million ADA, $29 million. This is despite the fact that prices fell to levels comparable to those seen in May. If prices do increase as a result of Alonso's publication, the already profitable 82% addresses could see an increase in figures and profits. To accomplish this, Cardano needs maintain its current high correlation with Bitcoin, 0.83. Simultaneously, ADA's volatility should be kept as low as feasible, below the current level of 109%. Ukraine and Panama intend to follow El Salvador's lead in the crypto space. A few hours after Bukele recognized Bitcoin as legal cash in El Salvador, a Panamanian deputy spoke about the country's next government projects. Additionally, the Central American government plans to adopt cryptocurrency before the end of the year. The global adoption of Bitcoin may be huge. Panama introduces a cryptocurrency bill to capitalize on emerging blockchain technology. This Bitcoin adoption intends to make Panama more attractive as a source of employment and to make national activities more transparent. The decree will ensure legal, fiscal, and regulatory security for all Panamanian citizens, allowing them to easily use, save, and exchange cryptocurrencies. This legal initiative discusses Bitcoin as a legal cryptocurrency, as well as other prominent coins such as Ethereum, ADA, and Solana. While Panama has begun work on its cryptocurrency initiative, Ukraine has begun work on a legislative framework that will assist cryptocurrency. However, unlike the Panama Treaty, this order has the exclusive purpose of regulating cryptos. Ukraine intends to centralize control of decentralized currencies and to link them to the native currency, the hryvnia. Ukraine will normalize cryptocurrency trading through the issuance of a new currency, likely a stablecoin. These adoption efforts have been replicated in China, where the yen coin was launched. What about the future of cryptocurrencies? Cryptocurrencies gained popularity last year, reaching a peak of $64,000 in May. With such a high price, it was surprising to see that Bitcoin had lost 50% of its worth. Bitcoin is one of the most commercialized currencies today, and as a result, organizations such as Visa have pondered developing decentralized payment systems. Latin American countries like El Salvador, Panama, Cuba, Venezuela, Brazil, Colombia, and Argentina have been receptive to Bitcoin adoption, which has increased the currency's value. Taking this wave of adoption into account, the future of Bitcoin and cryptocurrencies may be prosperous in terms of supplanting the current financial market. For the time being, this new Bitcoin acceptance increases the cryptocurrency's market capitalization to $859,171,183,394 and its circulating supply to more than 18 million BTC, according to CoinMarketCap. The cryptocurrency is trading at a steady $45,669, with a 0.95% recovery in the last 24 hours. Before the end of the year, Bitcoin may achieve a new all-time high. The South African exchange imposes withdrawal restrictions on anyone involved in illegal activity. Markets and exchanges for cryptocurrencies have become extremely vulnerable to criminal activity. Indeed, exchanges are used to facilitate money laundering. This is why the South African exchange, Luno, restricts withdrawals to cope with the same. The restriction will be applied differently for each client and will vary by client. They hope that by doing so, they will significantly diminish illicit activity in the sector. What was the purpose of the South African trade? Luno's initial move was to suspend transfers to Binance from their platform. We are all aware of Binance's versatility, which makes it extremely easy to utilize it illegally. Luno has also implemented dynamic risk-based constraints, which put distinct limits on various consumers. The unfortunate thing is that they failed to warn their users, and when a user attempted to move their cryptocurrency to Binance, they discovered the transaction failed. When asked why they instituted this additional restriction, they stated that it was to safeguard their users. Simultaneously, Luno stated that it will assist them in substantially improving their compliance with anti-fraud and financial crime regulations. Luno also declined to disclose how the risk scores used to determine the withdrawal limit are calculated. Users should follow Luno's advice. Clients will have no control over their risk scores, the exchange made abundantly clear. It will have a large number of inputs from a range of different points that will contribute to the final score. However, users are advised to maintain their account details up to date to avoid being penalized. Simultaneously, they are advised to utilize security settings to prevent their account from being compromised. Additionally, Luno stated that the actions they are taking are not in response to a Financial Surveillance Department request. Indeed, they are doing so independently to ensure that financial crimes are avoided and that the exchange is extremely secure to use. What happens on the Ethereum network following the EIP 1559 launch? Let's figure it out. The Ethereum London hard fork, code-named EIP 1559, became effective on August 5, 2021. For many users, the event signifies the resolution of several long-standing difficulties in the Ethereum network. The unpredictability of gas prices and the inflationary nature of Ethereum's usage cost during peak periods are two examples. However, one must wonder, what potential flaws must Ethereum users now brace themselves for in the future? What, more specifically, would be the new status of the ERC-20 blockchain in the face of ever-expanding crypto sub-niches like NFT and DeFi? The EIP 1559 upgrade has a history. To get a sense of the possible impact of the network upgrade, let's take a look back at what happened on August 5. EIPs, or Ethereum Improvement Proposals, are a collection of publications that define new protocol standardization projects for the Ethereum platform. Typically, network optimization methods are implemented as Ethereum hard forks. The event has occurred multiple times since the debut of the Ethereum virtual machine. The Ethereum community has witnessed the deployment of two hard fork events this year alone, the first of which was the Berlin upgrade, which began on April 15. The London hard fork follows, which includes 5 EIPs as well. The EIP 1559 suggestion stood out among them. The EIP 1559 standard attempts to make transaction fees more stable for consumers in addition to implementing a new gas fee structure that will transform Ether into a deflationary asset through several burning mechanisms. What is the EIP 1559 network upgrade procedure? Despite much enthusiasm, the Berlin improvement had no effect on the sky-high pricing of ETH transaction fees. When the crypto sector saw a big upheaval as a result of the spread of DeFi platforms, gas prices became even more critical. Ethereum's developers used two essential components in the implementation of the EIP 1559 standard to change all of that. The first step is to implement a base fee framework to control transaction costs. Previously, Ethereum users' destiny was in the hands of mining gig operators who were given the authority to decide the rate. The new model, on the other hand, employs an algorithm to assure consistent pricing throughout the supply chain. The base charge is the bare minimum of gas prices required to certify a transaction as acceptable for processing in a block. This framework's flexibility to be high during times of high activity and low during periods of low activity is an intriguing characteristic. The inclusion fee notion is the second critical component of the EIP 1559 model. This function enables users to move their transactions up the waiting queue by introducing more incentives for whichever miner chooses them. The EIP 1559 standard's advantages. The most visible beneficial impact of EIP 1559 for most crypto traders is the recent price increase in Ether. The token's price rocketed to new highs and had more traded volume than Bitcoin less than 24 hours after the update was implemented. A closer examination of the event, however, reveals a number of major technical developments that institutional investors are pleased with. We'll investigate them in order. The impact of the asset burning function. Previously, investors were concerned about Ether's design characteristic, which makes it a capless asset with an infinite supply. This issue counted heavily against using Ether as a store of value because the maximum number of Ethereum that will ever be in circulation could not be determined. However, with the implementation of the token burn mechanism, Ethereum's current supply will be continuously reduced even while new coins are produced. And, as one might expect, during peak hours, the amount of Ether removed from circulation will be greater than the amount gained, as the basic charge is bound to rise. The recent surge in NFT transactions is an excellent example. While Ethereum's low or negative issuance rate cannot be completely relied on to anticipate its price, it does give a vital tool for investors to examine the outcome of investing in the coin. Ethereum is playing a larger role. Following EIP 1559, another intriguing update that has piqued the interest of investors is that Ethereum now has a far larger role to play on its chain. Previously, miners could accept other ERC20 tokens as an alternative payment mechanism for gas fees, other than Ethereum. In other words, other coins might replace ETH as a basic cost. The base charge for the EIP 1559 network update must be paid in ETH. A miner who wishes to receive an altcoin as a reward can do so by prioritizing transactions in which the inclusion fee is paid in other coins. Otherwise, the mining gear operator must supply the necessary ETH. To summarize, EIP 1559 seeks to establish an economy in which Ethereum is the exclusive payment method. As more dApps rely on Ethereum's infrastructure, the cryptocurrency will undoubtedly evolve into a capable payment mechanism. When combined with Ethereum's reputation as a reliable computing system in the blockchain business, it is easy to predict how well this will turn out. Controversial hard forks are not tamper-proof. The crypto world has become accustomed to watching many fork events go wrong since the inception of Bitcoin. This is due to the decentralized structure of blockchain networks, which makes it nearly impossible to prohibit the continuous existence of obsolete standards. During the Ethereum network fork in 2016, for example, dissatisfied miners who refused to update to the then current version of Ether's client software created Ethereum Classic. The possibility of a similar mutiny has followed the official announcement of the EIP 1559 standard ever since. That's why it became such a big topic. Ethereum developers created the EIP 3554 proposal in order to avoid such a development backlash. EIP 3554 seeks to force miners to migrate to the new Ethereum blockchain by making the older version more difficult to use. It is part of a long-term strategy to convert Ethereum to a proof-of-stake network, as opposed to the current proof-of-work, which is energy-consuming. The difficulties that have still to be resolved as consumers prepare for ETH 2.0. While EIP 1559 introduces a new feature that will increase the predictability of gas fees while also stabilizing Ethereum's volatility, it does not imply that transactions would be cheaper. The charge, however, can only be increased or decreased by 1.125x every block. This will go a long way towards removing ambiguity about Ethereum's transaction costs and bolstering its stability. However, EIP 1559 does not address the scalability of the Ethereum blockchain, which is a major worry. Even in its current state, Ethereum can only manage a modest number of transactions per second when compared to competitors like Solana, Binance Smart Chain, Polkadot, and others. However, it is believed that the impending ETH 2.0 will solve these concerns by 2022, when Ethereum will be able to perform 100,000 transactions per second, much higher than the current capacity of 30 trans per second. The use of a sharding method will enable this. The implementation of EIP 1559 is just one of several steps leading up to the eventual switchover. For the time being, the crypto community should be satisfied with the enhanced user experience brought about by the new network modification. Miners, on the other hand, must make do with the inclusion fee as their sole source of income. Ethereum is valued between $26,000 and $35,000 by Standard Chartered Investor Guide. Standard Chartered analysts are the latest bulls on Ethereum, valuing the cryptocurrency at about $26K, $35K per Ether in their recently released Investor Guide, ETH. The Investor's Guide's first phrase states, "Structurally, we value Ethereum at $26,000 to $35,000. It's understandable that the term structural in Standard Chartered Researchers' lexicon alludes to the more often used phrase fundamentals in cryptocurrency circles. However, what are these fundamentals to which Standard Chartered refers? The paper makes an attempt to appraise Ethereum through the lens of the financial market. It compares the worth of worldwide banks to the value of global credit card firms to arrive at a possible value of $35,000 per Ether, at which time its market capitalization would surpass that of Bitcoin, a phenomenon known as the flippening. According to the Standard Chartered research, the ETH ratio would also cross 0.161 and Bitcoin would trade at over $175,000, improving investors' perspective of all crypto assets. It reiterates that Ethereum is a superior medium-term investment than Bitcoin, despite the fact that it is more complex and risky. Ethereum must successfully deploy Ethereum 2.0, which will improve security, scalability, and power consumption. While Ethereum 2.0 timescales are not set in stone and are subject to change, it is envisaged that the reduced ETH circulating supply caused by supply being held in the Beacon Chain ETH2 staking contract would provide a price cushion. It is aided further by the EIP 1559 induced burning and the subsequent significant decline in issuance following the complete transition to proof-of-stake, POS. Standard Chartered analysts appear to be cognizant of environmental concerns surrounding proof-of-work, POW, networks and predict that Ethereum going green during the merge will significantly boost its attractiveness to the environmentally aware audience. Additionally, the analysis demonstrates that crypto assets are rapidly gaining legitimacy within the existing financial system, to the point where they can no longer be ignored or dismissed as fleeting fancies. Greyp Bikes, a Croatian e-bike company, now accepts cryptocurrency payments. Greyp Bikes, a Croatian innovation and entrepreneur, has integrated cryptocurrency payments into its online billing system. Due to a partnership with payment processor Paycheck, all of its high-tech cycling equipment may now be purchased using 9 different coins. Greyp Bikes now accepts cryptocurrencies for purchases of its electric bikes. Greyp Bikes of Croatia, which aspires to be among the bicycle industry's technological leaders, has taken another new step. Through a collaboration with Paycheck, the country's largest crypto payment processor, the company has added support for 9 major cryptocurrencies: BTC, ETH, BCH, XLM, XRP, DAI, EOS, USDT, and USDC. It recently announced the following. Greyp has always been at the cutting edge of technology in the world of cycling, so this was the logical next step in the brand's development, the Sveta Nedelja-based producer of high-performance e-bikes stated. Additionally, the firm highlighted that while customers could purchase its bikes using Bitcoin prior to the relationship with Paycheck, cryptocurrency payments have been expedited and incorporated completely into the online checkout process on its website, greyp.com. Paycheck is a platform built by Electrocoin, a Croatian finance firm. The payment processor has already assisted other local businesses in implementing cryptocurrency acceptance. Earlier this year, Paycheck enabled crypto payments at over 45 T-Forn petrol stations in Croatia, while Electrocoin enabled Croatian Post to offer a crypto exchange service at its post offices 2 years ago. The move should come as no surprise to anyone who follows Livno-born entrepreneur Mate Rimac's vehicle and bike purchases, the Total Croatia news portal said in its piece on Greyp's intention to embrace Bitcoin payments. Greyp Bikes was formed in 2013 by the Croatian entrepreneur Rimac Automobili, which he founded in 2009 as a manufacturer of electric sports cars. Porsche and Hyundai of the Volkswagen Group currently hold a portion of the automobile company. Porsche and Rimac established a new venture in July that will include Volkswagen's high-performance brand Bugatti. Greyp's cryptocurrency integration is not the only example in the cycling business. Toba Electric Bikes, situated in the United Kingdom and selling e-bikes manufactured by the Spanish firm BH, added support for BTC and BCH payments in 2018 and launched its own utility token in partnership with SLP-centric trading site Cryptofile in 2019. Zimbabwe's finance minister appeals to residents to invest in Bitcoin. While Bitcoin adoption is increasing globally, Africa has historically had a high level of acceptability, at least among its people. While countries such as Nigeria have taken a stand against cryptocurrency use, Zimbabwe has once again opened its doors to the new technology. Yuli Ncube, the country's finance minister, recently visited Dubai's DMCC crypto center, where he was intrigued by methods to reduce the cost of money transfers. As observed by Ncube, I paid a visit to Dubai's DMCC crypto center, an intriguing incubator hub for cryptocurrency and payment solutions. I discovered methods that could result in a reduction in the costs of diaspora remittances. The World Bank estimates that the Zimbabwean diaspora pays up to $90 million on remittance fees each year. This is not the first time the finance minister has spoken out in favor of cryptocurrency. Several years ago, Ncube asked citizens to invest in understanding emerging inventions like Bitcoin and urged authorities to follow the lead of countries such as Switzerland in investing in and understanding Bitcoin. While some in the crypto community lauded such pronouncements from authorities, others questioned the minister's tardy recognition. Victor Maypunga, CEO of FlexVint, reminded the minister that Zimbabwe already has a thriving blockchain and cryptocurrency ecosystem. In his words, "In Zimbabwe, we already have blockchain and cryptocurrency startups such as at FlexTX that collaborate with local players." Many others agreed with the CEO in the comment area, with some arguing that the country should do more to promote its cryptocurrency firms, particularly given Zimbabwe's recent inflationary experience. According to the Cato Institute, South Africa's monthly inflation rate exceeded 50% in 2007 before falling to 89.7 sextillions per year in November 2008. Zimbabwe's high inflation rates persist, making cryptos ideal for keeping value in the country's inflation-prone economy. Even as cryptocurrency investors increased in Zimbabwe, not everyone believed cryptocurrency was a good idea. On Twitter, Senator Joe Paseo stated, "When banks cease currency manipulation, the Reserve Bank of Zimbabwe, RBZ, may explore cryptocurrency. Otherwise, a huge ZWL, Zim dollar, crash will result." We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.